Imagine a company operating silently but with the ability to pull strings in the global economic scene effectively. Ready? Now meet BlackRock, one of the world's most not-so-secret maestro companies with a foot in various industries, from the food we eat every day to the tech industry. Over the years, BlackRock, an American multinational investment company, has grown and is now richer and stronger than even the Rothschilds. BlackRock's influence in the food sector means it holds stakes in big companies like Coca-Cola and Pepsi. In the tech sector, it also has stakes in Microsoft and Apple. It doesn't stop there. BlackRock is also in the energy sector as a significant investor in the fossil fuel domain. But how did BlackRock achieve such a feat that has seen it rival, perhaps even surpass companies like Rothschild? Well, to properly understand, we will head back to the 1980s where it all began. So brace yourselves and stay on track, as we will tell you one of the most interesting stories you'll ever come across in the financial space. We at Business Chronicles tell extraordinary business stories. Please subscribe to our channel to help us make more videos. BlackRock Incorporation is an American multinational investment company founded in New York in 1988. Since then, it has grown to become the largest asset manager in the world, boasting a huge asset portfolio worth $9.42 trillion as of June 30, 2023. With over 70 offices spread across 30 countries, BlackRock retains the New York office as its headquarters, serving several clients in over 100 countries. BlackRock is the chief asset manager of famous iShares group of exchange-traded funds. Along with the State Street and Vanguard Group, they are regarded as the big three in the world of fund and asset management. BlackRock's Aladdin software keeps tabs on all investment portfolios for several financial institutions, and its BlackRock Solutions division help provide risk management services for several financial companies. As of 2023, BlackRock made the 29th position of Fortune 500 list of the biggest corporations in the United States by revenue. One interesting part of the rise of the BlackRock is its owner, Larry Fink. Very few Americans know his name, but the truth is, he might be the most powerful person in the world's post-bailout economy. As the owner of BlackRock, his money management company controls and monitors around $12 trillion worldwide, including the balance sheet for companies like Freddie Mac, Fannie Mae, and AIG. The rise to success saw Larry Fink rebound and change the companies from the brink of humiliating failure to becoming a top financial company in Washington and Wall Street, and even surpassing Rothschild & Co. in the business and political circle. And among the men who travel the corridors between Wall Street and Washington, Larry Fink is often described as arguably the most important man in the world of finance today. But he's virtually unknown in Manhattan, a place where he owns a glamorous apartment on the Upper East Side. Many people have attributed the success of BlackRock to the fact that he's largely unknown to several people. But how does the story of BlackRock begin? Born on November 2, 1952, Larry Fink was one of the 3 children born of his parents, who were Jewish and lived in Van Nuys, California. His father, Frederick, owned a shoe store, while his mother, Lila, was an English professor. Larry went on to study political science and earned his bachelor's degree from UCLA in 1974. He also became a member of Kappa Beta and later received a master's in business administration and real estate at the University of California, Los Angeles Anderson School of Management. After his education, Larry Fink started his business career in 1976, working at First Boston, a New York-based investment bank. During his time there, he was a managing director, a member of the Committee for Management, and the co-head of the Taxable Fixed Income Division. Fink also established the Financial Futures and Options Department of the company, heading the Mortgage and Real Estate Products Group. After losing a large amount of money due to a wrong prediction, Fink decided he was going to start up a company aimed at investing in clients with incorporating risk management to avoid losing money as he did. While Larry Fink is majorly credited with the company's rise, he was not the only person involved at the start of the BlackRock. In 1988, the company was founded by Larry Fink alongside Susan Wagner, Ben Golub, Robert S. Capito, Barbara Novick, Hugh Frater, Keith Anderson, and Rothschilds. The group came together with the aim of creating a firm that would provide institutional clients with managing their assets from risk management standpoint. Before the company's formation, Fink, Golub, Capito, and Novick worked together at First Boston. During their time there, Fink and his team were the pioneers of the now widely known mortgage-backed security market in the US. Fink's tenure saw him lose a whopping $100 million as the head of First Boston. However, the loss and experience gained became a motivation to Fink to develop what his team considered to be an excellent risk management and fiduciary practice. Initially, Fink sought the operating fund needed to start the business from Pete Peterson, who was with the Blackstone Group. He was one of the very few who believed and shared in Fink's vision of establishing a company for risk management. Blackstone gave Larry Fink and his team of associates a credit line worth $5 million in exchange for 50% stake in the business. It didn't take long before the business became largely profitable, and by 1989, the group had quadrupled the value and was now worth $2.7 billion, with the Blackstone percentage dropping to 40% compared to Fink's staff. At the start of 1992, Blackstone's stake in the company was around 36%, and as a result, Fink and Stephen A. Schwarzman started considering the possibility of selling their shares to the public. So they adopted the now famous BlackRock name, and by the end of the year, the firm was managing around $17 billion in assets. By the start of 1994, Fink and Schwarzman had an internal issue regarding the methods of equity and compensation. Fink wanted the company to share equity with people it newly hired so as to lure talents from the banks. On the other hand, Schwarzman didn't want Blackstone's stake to be lowered any further. The difference in their philosophy was uncompromisable, so the pair mutually agreed to part ways, with Schwarzman eventually selling BlackRock, a decision he later described as heroic mistake. In June 1994, Blackstone sold off its mortgage securities units to PNC Financial Services for $240 million. The unit had $23 billion in assets and had traded mortgages as well as other fixed income assets. During the sales process, the unit officially changed its name to BlackRock Financial Management from the previous Blackstone Financial Management. After the change, Schwarzman stayed with Blackstone while Larry Fink became the CEO and executive chairman of BlackRock. By October 1999, BlackRock eventually became a company. It sold traded at $14 using an initial public offering on the NYSE, and by the end of the year, it was managing over $160 billion in assets, growing organically and by acquisition. At the start of the 21st century, Charles Halleck took over operations in 2000 and launched BlackRock Solutions, the company's risk management and analytic decisions. By 2004, precisely August, BlackRock completed its first major acquisition, purchasing State Street Research and Management Holding Company, SSRM Holdings Incorporation, from MetLife, and that was for a whopping $325 million in cash and another $50 million valued in stock. After the acquisition, BlackRock's asset under its management rose from $314 billion to $325 billion. In 2006, BlackRock merged with Merrill Investments Manager Division. The deal saw BlackRock half its PNC ownership and give Merrill a 49.5% stake in the company. After that deal, BlackRock proceeded to complete a $4.5 billion purchase of a Manhattan housing complex called Stuyvesant Town Peter Cooper Village. At the time, it became the largest residential real estate deal in the United States. When the project ended in default, clients of BlackRock lost their money, including the California Pension and Retirement System, which lost around $500 million. By October the following year, BlackRock made yet another acquisition. This time, it acquired Quellos Capital Management Fund of Funds business. In 2009, the United States Treasury Department retained BlackRock to analyze, unwind, and price all toxic assets owned by the American International Group, Morgan Stanley, Bear Stearns, Freddie Mac, and other financial companies affected by the financial crisis of 2007-2008. BlackRock was allowed by the Federal Reserve to superintend the $130 million debt settlement for American International Group and Bear Stearns. In that same year, BlackRock became the world's largest asset manager, acquiring R3 Capital Management, LLC, and managing its $1.5 billion fund. In 2010, BlackRock benefited from the economic crisis as Barclays, who intended to raise capital, sold off its global investor unit, including its exchange rate fund business and iShares, for $13.5 billion. Barclays Bank acquired almost 20% stake in BlackRock as part of the deal. By the following year, BlackRock's growth continued with an addition to the component of the S&P 500 stock market index. So it didn't come as a surprise in 2013 when Fortune listed BlackRock on its yearly list that included 50 of the most admired companies in the world. At the start of January 2014, BlackRock announced that it would be ending its regular practice of using Wall Street analysis on form. The information that was released publicly was part of a settlement deal with Eric T. Schneiderman, the Attorney General of New York. BlackRock also made an agreement to pay the $400,000 cost of investigation. By May of that year, BlackRock made another notable announcement. A corporation with TradeWeb aimed at risk management and trading liquidity for institutional investors in the derivative market and interest field. BlackRock also made it known that users of Aladdin risk management software will have access to several interest rates markets, including the United States Treasury bond, European, Australian, and Japanese government bonds, as well as interest rate swaps and United States mortgage and agency debt. In August 2014, the Central Bank of Europe hired BlackRock to advise on a potential bond buying scheme. The advising arm of BlackRock, BlackRock Solutions, assisted the ECB in creating a program for purchasing asset-backed securities as part of a wider plan to improve credit conditions in the Eurozone. The Greek Central Bank also hired BlackRock to assess the country's fourth-largest bank balance sheet. Due to a largely successful 2014, BlackRock set another record by becoming the world's largest asset manager with $4 trillion under its management, surpassing nearly 1,000 times the previous $1.5 billion it set in 2008. However, the Sovereign Wealth Fund Institute later responded that about 65% of the assets managed by BlackRock were institutional investors. The following year, 2015, BlackRock's asset under management grew further to $4.721 trillion, with the company entering into a definitive agreement to buy Future Advisor, a digital wealth management company that reportedly had $600 million under its asset management. As a result of the deal, Future Advisor was able to run its operation as a business entity within BlackRock Solutions. Before that acquisition, in April 2015, the Security Exchange Commission and BlackRock reached a $12 million settlement over a conflicting interest matter. After suffering some losses, BlackRock announced in November 2015 that it would be winding down the BlackRock Global Ascent Fund. The fund was initially the only dedicated global macro fund under BlackRock because it was majorly known for its exchange-traded and mutual funds. At that time, BlackRock was managing $51 billion in hedge funds, with approximately 35% of its in funds of hedge funds. March 2017 came with a major change in the company's portfolio. Mark Wiseman led a 6-month review that started a reconstruction of BlackRock's $8 billion actively managed fund business. The restructuring eventually saw the departure of 7 different portfolio managers and acquired 2 charge of $25 million, replacing quantitative investment strategies. At the start of the reconstruction, the iShares business accounted for 26% of $1.4 trillion of the entire asset under BlackRock's management. iShares also accounted for 38% of BlackRock's vast income. In 2018 of August, BlackRock signed a deal to join one of ICE development in a new exchange trade fund platform that was expected to launch in 2019. For fixed income execution procedures, diverse assays like municipal, corporate, and treasuries, the platform stated that it would be linked to ICE and TMC bond trades. In March the following year, BlackRock secured a deal to acquire eFront Software Company as part of its plan to expand its financial technology operations. At the start of 2020, PNC Financial Services made a bold move to sell its BlackRock stake for a total of $14.4 billion. On January 14, 2020, BlackRock announced to the public that it was adding a new type of phone that would help investors avoid making wrong investments in companies that might contribute to climate change. This move brought the total ESGs and ESG-related ETFs offering to 150. On February 13, 2020, the Intercontinental Exchange said it had integrated Aladdin and its ICE Bonds fixed income trading platform, providing access to the ICE bond portfolio with auctioning capabilities and an automated execution mechanism. When the COVID-19 pandemic hit the world in early March 2020, the United States Federal Reserve put BlackRock in charge of 2 corporate bond buying programs, the Secondary Market Corporate Credit Facility and the $500 billion Primary Market Corporate Credit Facility. To cushion the pandemic effect, BlackRock concluded 2020 in grand style when they received approval from the China Security Regulator Commission to establish a business for mutual funds in the country. The deal made BlackRock the first ever global asset management company to get approval from the Chinese government to begin operations in its country. While the deal was a huge achievement for the parties involved, it meant that BlackRock cut down operations and investments in India, increasing its Chinese investments. However, BlackRock still maintains a dedicated India fund, which it uses to invest in Indian startups like Python, Bijou, and Pine Labs. BlackRock entered the cryptocurrency world in August 2022 when it announced a partnership with the Coinbase Global with the aim of making it easier for BlackRock institutional investors to trade and handle Bitcoin. The partnership with Coinbase also allowed its top clients to utilize the Aladdin Investments Management System in managing their Bitcoin exposure, along with other traditional portfolio assets like bonds and stock, as well as simplifying trading and financing on Coinbase exchange. In June of the following year, BlackRock made an application filing with the United States Securities and Exchange Commission for permission to launch a spot Bitcoin exchange traded fund. In November of 2023, BlackRock filed another application, this time for a spot Ethereum ETF. The aim was to ensure these two ETFs become part of its first spot cryptocurrency EFTs in the United States. Away from cryptocurrency, BlackRock took things a step further in August 2023 when it signed an agreement with the New Zealand government to set up a 2 billion NZ investment fund in solar, green, wind, battery, storage, hydrogen, and electronic charging projects as part of its plan to reach 100% renewable energy by 2030. BlackRock basically invests its clients' funds. The investment is put into several publicly traded companies, and sometimes these companies compete with each other. BlackRock is among the top shareholders of several companies in the world, including some of the largest, and this is due to the size of BlackRock's fund. According to BlackRock, its shares are ultimately managed by its client's company and not BlackRock itself. However, BlackRock also acknowledges that it can sometimes exercise shareholder votes on behalf of its clients without them necessarily having to make an input. As part of its long plan to enter into the aviation industry, BlackRock made an announcement in January 24 that it would be acquiring Taiyo Ogunlese's investment fund company, Global Infrastructure Partners, for a whopping $12.5 billion. The company's key assets include investment in Edinburgh Airport, London Gatwick Airport, and Sydney Airport. In its offer, BlackRock said it would make a $3 billion cash payment and 12 million of its shares. In response to the deal, Larry Fink said, "Infrastructure is one of the most exciting long-term investment opportunities as a member of structural shifts reshape the global economy. Policymakers are only just beginnings to implement once-in-a-generation financial investments for new infrastructure technologies and projects." Several high-profile personalities in the finance world classified the deal as one that would help BlackRock become a major force in the alternative investment space, giving it the opportunity to satisfy the needs of wealthy individuals and sovereign wealth funds, which came after Larry Fink reached out to private credit, hedge funds, and private equity firms. The acquisition is expected to be complete in the third quarter of 2024, provided all customary regulatory approvals and other closing conditions are met. One of the reasons why this deal is highly regarded by many is largely because how big Global Infrastructure Partners has grown over the last years. Prior to the deal agreement, Global Infrastructure Partners managed over $100 billion in client assets across several areas, such as infrastructure, equity, and debt. With a focus on transport, energy, water, waste, and digital sectors, Taiyo Ogunlese started GIP in 2006 with $500 million from Credit Suisse and General Electric. Global Infrastructure Partners has a significant stake in Edinburgh Airport after purchasing it in 2012 from the British Airport Authority. The Scottish Gateway handled the flights of over 14.7 million passengers each year in 2019 pre-pandemic. It recovered briefly to around 11.2 million in 2022. The company previously had the major ownership in London Gatwick Airport after buying a 2.5 billion stake in 2009. However, GIP later finalized the deal with Vinci Airports in 2019. The deal meant that GIP now held a 49.99% interest in the United Kingdom's second-largest airport, while Vinci held the remaining stake. The third airport investment Global Infrastructure Partner has in its portfolio is the Sydney Airport, as part of its involvement with the Sydney Aviation Alliance Consortium, which comprises GIP, the IFM Global Infrastructure Fund, the IFM Australian Infrastructure Fund, the Australian Super and Uni-Super, and the Australian Retirement Trust. In a statement released as part of the deal, BlackRock says, "Number of long-term structural trends support an acceleration in infrastructure investment. Further, large government effects means that the mobilization of capital through public-private partnerships will be critical for funding important infrastructure. GIP's deep understanding of the factors and forces driving operational efficiency, for long-term value creation has made them a global leader in infrastructure investing. BlackRock CEO Larry Fink added, "Bringing those two firms together will create the infrastructure platform to deliver best-in-class investment opportunities for clients globally, and we couldn't be more exciting for the opportunities ahead of us." The journey of BlackRock to the top to the financial space in the world has been nothing short of remarkable. Due to the sheer size and power of its financial assets, several people have called BlackRock the world's largest shadow bank, while others have tried to stop its growth. In 2020, Katie Porter and Jesus Garcia, both United States representatives, launched a bill with the aim of restraining BlackRock and other shadow banks. However, on March 21, Senator Elizabeth Warren suggested that rather than restraining BlackRock, it should be designated too big to fail, and therefore regulated accordingly with caution. Over the years, BlackRock has become so powerful, and today its founder Larry Fink serves on the Foreign Relation of the World Economic Foreign Council, commanding the attention of several political leaders and business tycoons all over the world. His company BlackRock is on the edge of consolidating world power, surpassing the likes of BlackRock Incorporation, and only challenged by Vanguard. If you enjoyed watching the video, do leave a like and subscribe to this channel for more interesting stories and hidden secrets.